higher rates in Europe seem to be the base case, a recession kind of back of mind for a lot of investors on both sides of the Atlantic. What are your clients telling you here about allocating funds to the U.S. versus Europe?
Well, on the central bank and monetary policy side, Kriti, absolutely, there is going to be more to come. The two central banks, the Fed and the ECB, have to combat a very similar situation, which is still a growing economy and a re-accelerating inflation. And as you said, we should expect these two central banks to go even deeper, even further, to the point, by the way, that in the United States, the Fed might actually cause a recession to combat inflation. And on the European side, just expect the ECB to go even deeper. I think that we might be reaching terminal rates that you and I would not have been contemplating even a few weeks ago. On the client side, clients are obviously eyes open. They expect a mild recession for the reasons we just covered, but their drivers are really linked to investing. They look at the still positive economy, and I see them invest in capex. I see them invest in M&A transactions. The strong dollar actually makes Europe even more attractive to our U.S. multinational clients. But conversely, in spite of the strong dollar, we see our European clients still very attracted to this U.S. market because it remains, no matter what, the most resilient economy in the world.
I'm so glad you mentioned the dollar here, because we're looking at a lot of strength on the dollar today, higher or stronger, say, by about 0.5%. The euro, on the other hand, trading at 105 against the greenback. It felt like at the start of the year, the kind of decline of the dollar was the base case. That's obviously changed in the last 2 months or so. But I have to ask, is 105, that currency level, a scary level for you?
Well, I wish you and I had a crystal ball on this one, right? And
right.
had we even met last week, probably I would have shared with you that we might be seeing, or economists might see the dollar weakening, but with the recent reaccelerating of the inflation and the probably deeper hawkish policy of the Fed, it might remain quite strong going forward. 105, listen, the fact that the bank I work with has diversified geographical presence, we have an ability to navigate, currency fluctuations, rate fluctuations, really with the main objective to advise clients. Then it's probably, if anything, it's probably more advising to clients. Another dimension to take into account for the multinational clients we have is some of them have operations here and outside of the United States, and they have natural hedges against currencies as well. And that's something that we see more and more.
Well, I think when we think of BNP specifically, for an American audience, is simply this is the JP Morgan of Europe, essentially. And we know that Jamie Dimon, the JP Morgan CEO of the JP Morgan of JP Morgan, talked about a 6% a potential terminal rate in the future, not as base case, but certainly something to keep an eye on. BNP, and BNP specifically in the U.S., has navigated that negative rate environment going back into Europe. Where do you invest, given that now that is no longer the base case around the world?
Well, really my daily life is pretty simple, actually, around two dimensions. Supporting clients and make sure the product offering we have, specifically for our U.S. clients, fit what the needs they have. On the client side, we've been investing in supporting our institutional clients. We've been investing in the sector expertise and expanding the sector expertise we have, but more specifically, not only the domestic sectors that have value to the U.S. franchise, but sectors that have global reach. For instance, tech and media, telecom, healthcare, which really resonate, globally. And obviously, supporting MNCs, both sides, is something that is important. On the product side, to your point, we've been investing in equities. We are growing our global franchise, global banking franchise, where we can provide short-term, medium-term funding solutions to clients.
Right.
And I would be remiss if I were not mentioning our expanding investment in sustainable finance, where we lead supporting clients around the world.
Well, BNP, speaking of products, is known for their derivatives products specifically, which then brings me to the go-to hedge that your clients are asking for. Is it as simple as buy a basket of commodities, buy the dollar, and call it a day?
Well, another great point. I wish I could say that today we have simple equation and easy clarity on things, and unfortunately not. I would say for us, fortunately, because there is so much more advising to provide to clients, I wouldn't say it's one specific hedge, given the volatility, the uncertainty, but we're advising clients very actively on hedging strategy around rates, commodities, equities, and obviously currencies.
So those interest rate differentials, then bringing it back to the rates picture and the currency picture, is that something that's top of mind for BNP here when there is such volatility that the Fed could then become the more hawkish central bank relative to the ECB?
What's really top of mind for our clients is how to manage the yield curve going forward. And it's probably even more top of mind for the institutional clients more than for the corporate clients. But what I see as a common thread for them, it's, again, something we should not undermine in spite of the rising inflation. It's we still benefit from a strong economy.
Right.
Labor market is tight. Capital markets are functioning. U.S. corporates are in a decent shape, even though obviously some corporate profits have been decreasing. Yeah. But the consumer here continues to spend, meaning we still expect GDP growth, and this is what clients are focusing on, the real opportunities to expand their business model.
So we talked about the consumer. Let's talk about businesses and your business specifically. BNP and the market share that they have in the United States, where is that market share growth mostly going to come from?
Supporting domestic clients, but in a very targeted way. Where we can be relevant with them in US dollars, but supporting their needs in capital raising in euros, where we lead. So that's one aspect. As I just mentioned, targeting the proper sectors where we can globally support them effectively. And on the product side, it's really around equities. It's around corporate banking, specifically supporting them in their short-term funding, bridging some of their capital market operations, as the windows at times might not be the best to raise capital. We've been very active, being one of the largest trade banks in the world, in helping clients navigating the supply chain disruption, helping them to, for the most manufacturing-driven one, from just switching from just-in-time, which is not really possible, to just-in-case. And obviously like the transatlantic corridor for the bank is a very important part. And as I mentioned earlier, sustainable finance for the bank is in the DNA. Our low-carbon transition strategy is working well, and the train has really left the station for clients on this matter.
More deals necessarily than trading volatility?
We expect more deals, we expect more transactions, and we're very optimistic that we can continue to grow market share in, again, one of the most attractive markets in the world.